The closure of Silicon Valley Bank of California and Signature Bank in New York started a firestorm of speculation, which has led to many questions about safety and soundness of financial institutions around the country. Today, we're talking with Triangle Credit Union CEO and President Scott MacKnight about the recent bank closures and how that impacts those who bank there and the banking industry in general. Good afternoon, Scott. Thank you so much for joining us today to talk about what has just developed over uh, early last week with Silicon Valley Bank and Signature Bank. So we appreciate you being here.
Yeah, glad to be here. I think this is a very important subject to talk about so that people understand what's going on, really get to the truth of the difference between that particular bank and other banks and also credit unions. So glad that we could do this to help out our membership.
Yes.
I think the first thing that we kind of wanted to bring up to you with Scott was just kind of to go over a little bit about what was really going on with Silicon Valley Bank, and what's the story there, because there's all kinds of information flying around here and there. So maybe just to help people understand initially, like what's happened. Do you mind giving a little bit of an explanation as far as you know?
Yeah, absolutely. Uh, Silicon Valley Bank was definitely very different than most banks. They really focused in their niche was on tech, high tech um, industries, startups, and they were capital venturists. And so that was a big part of what their makeup was. If you go to most community banks, they're not into that. They are, or credit unions, it's all focused on, helping the community obtain cars, mortgages, HELOCs, credit cards, that going down that avenue. Silicon Valley Bank, they were focused again, like I said, was looking at startup companies, what they could do, the tech industry. They were all out on the West Coast, but they had multiple branches here in the Massachusetts area as well. And that probably makes sense if you think about like some of the colleges that we have in Massachusetts. So I think it's really important that we distinguish between their business model versus our model here at Triangle Credit Union. And what we do is, as all our members know, is we go ahead and we lend out for cars, automobiles, for mortgages, for personal loans, HELOCs, like I had mentioned. And so our model, we actually end up by getting more, I guess, cash flow is the best way. If people have listened to what the news in the media has been talking about, a lot of it had to do with liquidity and problems they ran into with liquidity. And I won't get too much into the details on it. I think most people can do their own research on it. Most of my information I use from Bloomberg. I like Bloomberg with basically in the morning with surveillance. And so that's where I get a lot of my information. And so what happened with Silicon Valley Bank is they ran into a liquidity problem. And that's because their loans that they lent out had longer term maturities. And so therefore they weren't getting a lot of the money that what is amortizing the principal. They weren't getting a lot of that back. And then also on top of that, they had invested, which most financial institutions have, they invested into long-term bonds as well. And so they went ahead and they did that. So the amount of cash they were coming in for the liquidity resources wasn't there. So they did try to generate more liquidity. And again, I'm not going to get too much into that, but that's really where they ran into their problems from that standpoint. The credit unions, they're much different. Our models, whether it's Triangle or other credit unions, their model is much different. And when we look at the consumer loans, typically there's a lot that the principal is being paid. And the average, I would say probably the average maturity of those loans are anywhere between 3 years and 3.5 years. mortgages are longer, but again, there's a steady flow of cash coming back in, and then it gets sent back out there. And so that is the difference between Silicon Valley Bank and Triangle Credit Union and other credit unions and community banks as well. So I think that's really important to distinguish between the two, just because of the models are very, very different.
Mm-hmm.
So I just want to, from my perspective, Scott, from what you just said, it sounds like when you are a community credit union or a bank and you are lending out for automobiles, you're lending out for mortgages, you're lending out for personal loans, you have more diversification than what SVB had for their portfolio.
You're absolutely correct. Yeah, it definitely the diverse, whether it's the loan or the investment portfolio, the maturities. Yeah, definitely. That is typically typical with most credit unions and community banks and other banks as well.
And it sounds to me also like, if you are, if you're concerned with safety and soundness, then you would want diversification in your loan portfolio, right? I mean, that makes just good banking sense.
Yeah, absolutely. And that has always been our model here at the credit union. I mean, we've been around since 1939, and we've seen a lot of interesting events over that time. I haven't been here that long, but I've been here since 93. And so we've definitely seen a lot of different scenarios that have taken place in the economy. And because of our diverse portfolio, whether it's the products or the maturity, in the same maturity dates, and also with our investments, we have investments and it's short term. We did not put things longer term. That's just part of our model. So that has really enabled us to be able to have that liquidity we need just to keep on running. Although, for most of the community banks and for credit unions, and again, I'll speak for Triangle Credit Union, regulators are in here quite often, and they're doing their job, right? And they will go ahead and they'll look for systemic risks. And so we don't, we're in good shape. We're very solid with our practices, and there's no concerns on that. So, but going back to your question, Terry, on having the diversification in what we either invest in or we lend out. Yeah, absolutely. That is critical. And we've always done that. And that has really helped us get through difficult times with not really having a lot of disruption to our operation.
Yeah, that's phenomenal too. So were you here around the time of 2008 when that whole thing happened?
Yeah, yeah, absolutely. 2008, but also I'll go back to 99 with a .com bust.
Oh,
And
right.
yeah, so, again, we've stayed true to our business model of really being there for the community, helping out the community as much as possible. And we really did not struggle during those times. And again, it's because what we do is we continue to lend out to our communities, Southern New Hampshire and Northern Mass. We continue to give them the products they need, whether it's adjustable or fixed. They're straightforward products, and that has really helped us not get into complex lending. Keeping things very simple. And the same thing with our business members as well. Our business members, we that portfolio is very diverse, whether it's for real estate, whether it's for equipment, whatever the case is. We are very conservative in our underwriting and making sure that we're serving the community, and we're also making sure that there is no concerns or credit risk associated with our loan products.
Yeah.
Excellent. So, Scott, just in terms of we've mentioned Triangle a couple of times. What is there any direct impact to Triangle Credit Union and our members from the results of last week?
No, absolutely not. Again, we look at the different business models. The credit union will continue to do what it's been doing through all these different crises. And this isn't really even a crisis. I think this is, there's a lot of attention that's being done, that is being focused on the situation. It makes sense. But for us, the NCUA, we're insured just like the FDIC for banks. NCUA also has the same insurance policy for our depositors. And so, again, there's no problems or concerns with that. And so, as it was last week, last month, 10 years ago, 20 years ago, the deposits are still safe and sound here at the credit union.
Nice.
One of the things I would like to add to is there has been a lot of communication that has been given out. It's something I personally feel is important for the membership as stewards of the credit union, and I've said that before in other podcasts. I feel an obligation and a responsibility to the membership, making sure that you have the information. And some places, some financial institutions aren't doing that. I feel transparency is really important. And so there has been a lot of communications going out so that you understand what's important, because it really leads into is there's a lot of different media resources that people can obtain information. And what I have found, and I said this before, is I found that I trust the economists and the special guests with Bloomberg. I've found that them to be very reliable. And so really trying to get to the really a good understanding of the whole situation is real important. When you're going to other avenues, maybe it's YouTube or Twitter, there's been some comments on that. There's been a lot of misinformation, whether it's intentional or not. I don't know. I don't really pay attention to those avenues, but I think it's really important that our members really know what's going on. And so that's why there's been a lot of communication, and we're going to continue to do that because again, that is our job here, is to make sure that we're giving you the information you need. So,
yeah. Well, that's one of the reasons why we wanted to have you on, Scott, is to just have another conversation about this. Triangle's been great we've released a blog about it. We've been sending emails about it. So this is just another way to get this information out. So again, thank you for, taking time out of your day to talk about this, to just help reassure members who might be a little concerned for, who knows what reasons. Maybe they're getting their information from the sources that aren't as reliable. So it's definitely a good thing to have these conversations.
Yeah, and I appreciate you guys pulling this together. So nice job. Thank you.
Yeah, before we sign off, I do want to give some resources that Scott, you just alluded to. The blog is actually on triangleuniversity.org. And if you open it up, the blog is entitled Important Information for Our Members. It talks about some of the points that Scott brought up today, as well as the NCUA depository insurance of $250,000 per depositor. There's more resources on the blog. There's NCUA share insurance brochure. There's another brochure about how the accounts are federally insured, both in English and Spanish. And then also there's more information about your insured funds, again, both in English and Spanish. So I'm sure that Liz, you'll have these links available in the podcast. So
yep. In the show notes.
Excellent. Great.
Yeah.
All right. Again, thank you so much, Scott. We really appreciate your time and your sincere interest and genuine concern about how our members are responding to this. So we really appreciate that.
Glad to do it. Thank you.
Thank you, Scott.